So once again, here is the scenario. We're going to be journalizing, or we're going to be doing this for the month of May for the Chapter 7 and 8 Perpetual Inventory exercise. So here's keynote that you should have is that your inventory tracking method is perpetual and it is moving average. So I made it really easy for you guys. Moving average. Okay? Let's start with the first one here. Okay, that on May 1st, we purchased 500 brown mugs at $2.65 each, with the freight costing $100. And it's going to be placed on an account from Cuppies Co. Terms are 5%, 10, net 30. Okay, notice this, we have a chart of accounts. Okay, so in this case, right, let's take a look at my chart of accounts. Okay, all right, so we're going to practice journalizing this. So we purchased mugs on an account. So in this case, what accounts am I going to be using for this journal?
Mugs and accounts payable.
Mugs and accounts payable. Good. So in this case, right, we're going to do mugs for $150 and accounts payable is account number 201. Okay. So here we're going to go to our general journal. It is May 1st. We recognize that we bought mugs, right? It's inventory. And we placed it on an account. So accounts payable. Actually, I want to do everything in caps. Mugs and accounts payable. Okay, so for how much? Okay, let's look at the scenario one more time. You purchased a total of 500 brown mugs at $2.65 with the freight costing $100. So your journal here, how much of the cups did I put in here? So 500 at $2.65. Right? $2.65, yes. So how much is my total mugs?
It is one time. It is 1,425. No, you have the freight. You forgot that, no?
Yep, freight's 100. So therefore,
yes, but 500 times. But you're not supposed to add to the.
Yes, I forgot. Mug? Good. No, you're right.
Oh.
So 1425, you said?
Yes.
Okay, 1425. Good. And of course, I'm going to make my note here saying that I purchased this from Cuppies Co. And that I bought 500 mugs at $2.65 each. And that I was given terms of 5%, is it 15 net 30? 5%, 15 net 30, yes. Okay. So now we're going to plug that information into our inventory table. Okay. Whoa. Okay, there you go. So here we are. We're going to plug in that it is May 1st, right? We purchased 500 units at $2.65 each with the freight costing $100. So in this case, we saw that is $13.25 for the purchase price. Plus 100 gives me $14.25. Now in this case, because it's the only batch of inventory that we have, I'm going to go ahead and solve for my cost per item, which in this case should be $2.85. Okay. I'm going to carry that amount over into my inventory on hand. Okay. Yes, you had a question? Isabel?
Can I ask you something?
Uh-huh.
Yes. Before you hear me?
I can hear you. Can you hear me? Nancy, are you having issues hearing me too?
I hear you. So,
Okay.
so you can hear me too?
Yes, I can hear you.
Yeah. So my question is, when you ask, we journalize, we have a term for five. I don't remember 10 net 30. I don't remember exactly the term. We don't apply any discount. We what do you mean? We is net, is gross, or we just journalize like that the amount?
In this case, I'm not gonna test you on doing the net method, but this net just basically is another word to saying at the end of the day, you still have to pay at the end of 30 days.
On 30 days, but we journalize like we don't take the discount or we don't have any
Yes,
discount.
we're
Just like that, right?
we're just using the
If it's
regular
not
gross method. Yes. Isabel? Isabel?
yes.
All right, so continuing on. So we're going to go ahead and plug in our numbers into our inventory worksheet. So here I plugged in the date. We purchased 500 units at $2.65 each. And then we have a total purchase price of $13.25 plus $100 of freight, giving us a total of $14.25. Okay. Here, because even though we only have one batch of inventory, it is we're just going to go ahead and calculate our average cost per item here. Okay, so we get a total of $2.85 per item that we sell, right? And in this case, when we plug in our numbers, right, because we're using moving average, right, we have to remember we're constantly calculating our average cost per item. So in this case, the formula is going to be switched because this is the important part here is that we need to make sure that our amounts add up to make sure that we are constantly when we update our inventory and decrease our inventory, right, we have to constantly calculate our average cost per item. So in this case, my formula is going to be here right in the middle. I'm going to go ahead and take my $14.25 and I'm going to go ahead and divide that by my 500 to get a total of $2.85, okay? Okay. And there you go. I expanded it so then you can see how much the cost per item is. Okay. So then here on May 5th, or actually, yes, May 5th, we end up returning 15 broken mugs for a full refund. Okay. So in this case, we are going to return 15 of these broken mugs. So again, in this case, let's go ahead and journalize that first. We're returning 15 broken mugs. Okay. Now, in this case, right, when we are attempting to return items, right, where are we actually returning them from? Which account are we taking out from? And where are we refunding the money to?
Inventory?
Yes, we're going to be taking the items out of inventory because we no longer have those items anymore, right? We end up returning 15 of them. So therefore, we need to update our inventory to reflect that we have 15 less. But that's the same thing with journalizing too, right? In this case, we're going to be refunding the money to our accounts payable because, once again, we never made a payment. So the only option we have here is to receive or reduce our liabilities. And we're going to take it directly out from our mugs account. Okay. So I forgot to type in these here. So accounts payable was 102, oh, it was 201, and our mugs account for inventory was 150. Okay. Now in this case, how much did each of my coffee mugs actually cost me?
$2.85, no?
That's including freight. What did we originally purchase them at?
$2.65.
$2. Good. So we have 265, right? And we're returning 15 of those. So therefore, we should get a total of $39.75 refund and $39.75 as a deduction, right? And I'm going to go ahead and say right here that returned 15 broken mugs at $2.65 each, full refund. Okay. All right, I'm going to plug that number into our inventory worksheet. Now in this case, right, this dealt with our purchases. So this is what I'm going to do here. I'm actually going to go ahead and say I returned 15 items at $2.65. So that means your total cost should reflect this. That we should have a negative $39.75. So that's exactly what I'm going to do. I'm going to plug in those numbers here, right? Because I no longer have 100, I have 15 less. So that should give me 85. Or I'm sorry, 500 minus 15 is going to give me 485. Okay? And same thing here, we're going to have to take out from our 1425, we have to take out our $39.75. Okay? To bring us down to now $1385.25. Okay? And with that being said, right, we also have to calculate our average cost per item, which in this case is going to be 2.85618. Okay. And with this, I'm going to go ahead and block off this top part here because I don't need it. It's going to distract me if I leave it there. Okay. All right, back to the scenario here. We also had you sold 10 mugs at $10 each for cash. Okay, so we sold 10 mugs at $10 each for cash. So let's journalize that transaction first. Okay. it is still May 5th, okay? So in this case, if we sold 10 coffee mugs at $10 each, then how much cash should I be receiving?
$100.
$100, right? That is what 10 times 10 is. Right? Now let's go ahead and check my chart of accounts to see if I even have a cash account. And I do. It's account number 102. And because I'm recording the sale that had happened, right? Because we sold stuff, therefore you should have sales, which is account number 401. Okay, so here, sales is account number 401. For a total of $100, right? And of course, we have to assume that we have sales tax, right? Did I mention that we have sales tax? So in this case, sales tax payable, right? Let's take a look at my chart of accounts. Do I have a sales tax payable? Yes, I do. And your assumption here is that it's always going to be 8.25%. So what is the tax here going to be for the sale of $100?
$8.25.
$8.25. Okay, so sales tax payable, account number 230 for $8.25. So therefore, how much cash should I actually be getting?
108.25.
108.25. Okay. And of course, you're going to say, well, in this case, I'm going to hold off, okay? Now, in this case, because I'm using perpetual inventory, what else do I need to journalize?
The inventory.
Inventory.
Cost of goods sold.
Good.
Cost of goods sold.
So in this case, we're subtracting inventories. That's going to be a credit. And we are debiting our cost of goods sold. Okay, so let's check out what those account number is. Oops. Chart of accounts. Cost of goods sold is 501. Okay. So let's go ahead and figure out how much the cost of goods sold is, because in this case, I actually have to go to my inventory worksheet to be able to solve for my cost of goods sold. So in this case, right, it is I think it's May 5th, right? We sold 10 mugs, okay, at a total price of
$10.
okay, that's selling price. How much did it cost me?
2.85.6.
Yep, 2 point. Okay. Okay, and what's my end result here?
$285.61 something.
28.56.
28, yes, yeah.
Hold on, I don't know why I have a negative here. $28.56, okay? Good. So, as we know, right, because we're doing moving average, we need to update our inventory. So, how many items do we actually have left in inventory?
475.
475, okay? At what total cost? If I sold $28.56.
1,356.68 8.
68.8 gives you 69.
69. Okay.
Good. So then, again, we must recalculate our average cost per item, which gives you more or less the same number, except your lasting number is going to be a 9. Okay? So here, we know what their cost of goods sold is. It's $28.56. So we need to now journalize that in here that it was $28.56. Okay? And this is why you need to have a rounded number, because you can't be costing 10,000th, a hundredth of a penny in your journal, right? Because in the journal, it's measured in terms of dollar value. Can you realistically have half a penny? No, you can't. So, especially in the journals, no, you can't have half a penny. Okay? So again, I'm going to go ahead now indicate that I sold 10 mugs. Okay. Good. Any questions so far?
No.
Okay. Dive right into this right here. So then on May 6th, we end up selling 20 mugs at $10 each to customer A on an account. And we gave them terms 10%, 10, net 30. Okay. So in this case, we're selling our mugs to customer A
Mm-hmm.
on an account. So what accounts am I going to be using for my journal?
Account payable. Account receivable.
Accounts receivable, not payable. Because we sold to a customer. Correct. Okay. Okay, so it's going to be accounts receivable, right? We charged, or we made a sales, so therefore we must be obligated to charge sales tax. Okay. So in this case, accounts receivable was that 102? I don't think it was. Whoops. Let's see, accounts receivable is account number 103. Then we have sales, which is 401, and then sales tax payable, which is 230. Okay, so same thing here, except what's my calculation going to be? So in this case, right, we sold 20. Yes, we sold 20 mugs to customer A.
So we have 200.
Okay, good. Oh, not cash. Wrong one. 200. Okay, what is my total tax on this?
$16.5.
$16.5. So 16.50.
Mm-hmm. 60, yes. Yes, yes.
So therefore, what is my total amount that this person owes me?
216.5.
Okay, good. Okay, so we made a sale. So what else do we need to include?
Cost of goods sold. And the inventory or the mag or whatever it is.
Okay, so in this case,
Cost of goods sold.
cost of goods sold.
Mm-hmm. And then the inventory. Mm-hmm.
So hold on, cost of goods sold was count number 501 and inventory is 150. Okay, so now let's go ahead and calculate our cost of goods sold here. So we are on May 6th. We barbecue. Sorry, we sold coffee mugs. Sorry, where did I get that from? We got how many mugs did we sold? We sold 20 of them to customer A, right?
20.
Yeah. And at what cost?
2.856189.
Good. So therefore, what is my total cost of goods sold?
$57.12. I have to stop there.
Good. 57.12. Good. So then now we need to update our inventory, right, to reflect how many mugs we still have left available, right? So in this case, what's my new quantity after selling 20?
155.
455, and then we need to also sell. We also need to update our total cost here. So minus the 57.12, and we should get how much?
We have 1,299.57.
Good. Bringing our total cost per item to be the same, more or less, except now it's increased by 10,000th of a penny. Okay. All right. So there we are. We have our cost of goods sold at $57.12. So we need to update our journal because we need to say that we have $57.12 that we sold. Okay. And of course, you need to make your note here that you sold 20 mugs to customer A. Okay. So above you should have put in the customer A with the I think I'm gonna add that because you need to know that you have given them terms. So customer A, right? And you gave them terms of 5%, 10 net, 30. Right? Those are the terms that we gave and the conditions that we gave to customer A. Okay. Good. So now let's see what happened here. On May 8th, we end up purchasing an additional 250 mugs at $2.75 each, with the freight costing $50. Okay? Oh, it's 10%, not 5%. My bad. Okay. So, in this case, we purchased an additional 250 mugs at $2.75 each, with a freight cost of $50. And here we place it on an account with Cuppy's Co. What they gave us 5%, 15 net 30. So in this case, we need to journalize that we received inventory. Okay.
The max and account payable, no?
Mm-hmm.
Plus 50 equal account payable.
Okay, so how much was the total amount? So we bought 250 at $2.75 each. Okay, plus 50, so 687.50 plus 50.
Is 737.5.
737.50.
Yes.
Good. All right. And here I'm also going to make a note that I purchased this from Cuppy's Co. And that I purchased 250 mugs, okay, at $2.75 each. And it gave me a 5% discount if I pay within 15 days. If not, the whole thing is due in 30. Okay. And of course, we need to update our inventory as well because we have inventory. So we're going to go ahead and put in here the date, which is 5/8. Plug in that we purchased 250 items at $2.75 each, with the freight costing you $50. So in this case, what was my total purchase price? $687.50 plus 50 gives you your $737.50. Okay. So here we need to now update our inventory because we made a purchase of inventory. So therefore we need to increase our values here. Okay. So if I started with 455 items and I just purchased an additional 250, I should get a total of
705.
705. Okay, if I started out with $1299.57 and I added additional $737.50, how much do I end up? What's my ending total?
2037.07.
Good. And bringing my new cost per item to be
288,946.
yes. Good. Okay. Ooh, I forgot to clear out all this. Okay, so let's clear them all out. Okay. All right. So then let's go ahead and see what else happened next. Okay. That very same day, you end up returning, okay, 50 of those mugs because they were the wrong color. they sent you black cups instead. But for some reason, Cuppy was convinced us to keep the cups because we could, at the end of the day, sell the cups. The only difference is it's just the color. Now, in this case, they offered 15% discount to reprimand their mistake, right? They gave us 15% discount, so then we can use that on our items on our account, right? So in this case, right? So how do we represent this 15% discount, even though the items see that they were just the wrong color? So in this case, how do we journalize this? How are we going to represent an allowance?
Sell returns and allowance.
Okay, not sales returns and allowance because we didn't sell to a customer.
A purchase allowance?
In this case, where are our items located?
Inventory.
It's in an inventory. So you're just going to take it directly out from inventory. Okay? So, but in this case, right, I'm getting a refund no matter what. So it's going to reduce my accounts payable account. Okay? And again, it's also going to reduce my mugs. Okay? And in this case, I'm going to go ahead and allow you to go to your inventory worksheet to figure this number out. Okay? Because we need to subtract that we got a 15% discount. So in this case, right, it's going to be, we're obviously not returning anything, right? And it is for $2.75 each, right? And in this case, how much am I actually going to be refunding for? Okay. You're getting a 15% discount by refunding 50 of those brown mugs, which cost us $2.75 each. So in this case, my number should be
$20, 625. $20.625. No? That's a discount on the 50.
yes, that's how much money we're getting back. $20.63. So in this case, right, how much am I, since in this case, am I returning anything?
No.
No. The Cuppies Co. convinced us to keep those mugs, but give us a 15% discount. So in this case, it's going to affect nothing. Nothing to the quantity. However, it is going to affect my total cost.
Yeah. Divide by 705. What? Jeez, something is wrong here. Something. Okay. 2016.45 divided by 705. It is 2.
Okay, good. Good. So we still have 705 items left available, but this time, because we made changes to the total cost, it changed our cost per item. Okay, so it used to be 2.856, now it's 2.8602. Okay, so there you go. That's that right there. Okay, good. So then let's see what happened next here. On May 10, okay, you sold 30 mugs at $10 each for cash. Okay, so we sold 30 mugs, $10 each for cash. All right. Forgot to make my note here. So we got an allowance for 50 black mugs at $2.75 for 15% discount. Okay. So again, this is now May 10. We sold 30 mugs at $10 each for cash. So obviously, you're going to be receiving cash. Okay. And obviously, this is a sale. And this is, we're going to get charged sales tax. Okay. So if we sold 30 mugs at $10 each, how much is my total sales?
300.
Okay, how much is my tax I'm going to charge?
$24.75.
Okay. So therefore, how much am I supposed to be receiving?
$325.75.
Good. There you go. And because we sold 30 mugs, we need to record that. So cost of goods sold in our inventory, which is mugs. Okay. So let's go ahead and calculate our cost of goods sold real quick. So here we are. It is May 10. Okay. We sold 30 mugs at what cost?
At 286.0206.
Okay. So what is my total amount of cost of goods sold?
$85.80.
$85.81. Did you say 1 or 80?
81, sorry.
Good. So let's update our inventory since we sold 30 mugs. So you should have a new total of $675. Okay. So we should get $1,930.64, which then should bring my cost per item to be good. Right? Didn't change by that much. Okay. Okay. So again, we have our cost of goods sold of $85.81. Ooh, whoa. 85.81. Okay. Okay. So let's take a look at our next scenario. Okay. Then the 12th of May, we sold 60 mugs at $10 each. Okay, and we sold it to customer B on an account. Terms are 10%, 10, net 30. Okay. So let's go ahead and journalize this real quick. Okay. So here we sold to customer B. If we sold it to customer B and we gave him terms, right, of 10%, 10, net 30, then how did we sell to customer B?
On an account?
Yes, we placed it on an accounts receivable. Okay, just gonna copy this whole block here. Okay. On May 12th. Okay. So in this case, how many items did we sell to customer B? We sold 60 mugs at $10 each. So what's my total sales from customer B?
600?
600, okay. How much tax am I going to charge customer B?
8.25% of 600. 49.50.
49.50. So in grand total, customer B owes me $649.50. Good. And then again, update your information here. Customer B with the 10%, 10 net 30. Okay. So in this case, I sold to customer B. So I sold 60 cups to customer B. So I got to go back to my inventory worksheet and plug that number in to my cost of goods sold section. Okay. 512, we sold 30 items at what cost? Ooh, I think I skipped a line. Yes, I did. 512, we sold 60 cups at what cost?
The 2.860200.
Good. Keep bringing me my cost of goods sold to be
171.
171.61. Okay. So let's go ahead and update
Yes.
my inventory because I sold 60 units. So I should have a total left of
615.
615. Okay. Okay. Which then should bring me down to my new average cost per item to be now more or less the same. Yes, all the way down to the very last 10,000th of a penny. Okay. All right. So here we have our cost of goods sold to be 171 and 61 cents. So let's plug that into my journal. 171.61 cars. And we need to also say that we sold 60 mugs to customer B. Okay. So then let's see what happened here. On May 15, okay, May 15 rolls around, so 3 days later, customer B decides to come back to the store and return 30 mugs for a full refund. Okay, so maybe they don't need those cups anymore. Maybe, yeah, they bought too many. They don't like it. It's not a good size. For whatever reason that they decide to no longer have those cups anymore, they returned to us 30 of them back. Okay? So how are we going to journalize this time? Right? Let's take a look at my chart of accounts to see if we have the accounts that we need. Okay? If customer B is returning something, what are we going to use?
Sales return and
Yes.
Sales return.
Yes. So 406 for sales returns and allowances. Good. All right. And this time it is May 15, sales returns and allowances. For 406. Okay. How did customer B pay?
So, but he paid that, so he's an account. He didn't pay that, right?
Exactly. So how are we going to give back the money?
So are you charging tax, or you don't count the tax here, sales tax, and
Of course
count the
we
payable?
goods, not payable.
No, receivable.
We have to also give him back his sales tax as well. And then it's going to reduce the accounts receivable. Okay.
Then the inventory, so you put it back.
Yep. Yes. And we're going
And
to,
cost of goods sold.
yes, we also have to put back the items in inventory, which in this case is mugs, and we're going to reverse the cost of goods sold. Okay. So, again, inventory is 150, cost of goods sold is 501. Okay, so let's focus on the sales first. In this case, right, if we originally sold each cup at $10 each, right? And he wants to return half of it, which is 30 of them. So what is your total amount of sales returns and allowance?
$300.
300. Okay. How much tax are we going to be refunding?
$24.75.
$24.75. So therefore, we're going to reduce customer B's account by $324.75. Okay. Okay. And then, of course, we have to also figure out how much to put back into my inventory. So I'm going to go ahead and go to my inventory worksheet. And what's going to happen is I'm not going to reverse anything. I'm going to calculate it exactly how it should be calculated. Okay. So except this time, instead of doing an actual cost of goods sold, right? This is the 15. We're actually going to do a negative amount. However, how much is the average cost for this batch of inventory now? Okay. Go ahead.
$2.86. $2.86.02.
Yes. So again,
86, but $2.86.02.
yes. So in this case, right, we do need to recalculate this. So what is my total cost of goods sold?
85.81.
85.81. So therefore, I need to plug that number back into my inventory worksheet because I have to put it back into inventory because remember, they are returning the items. So I have to put back these items into inventory. So how much is my inventory now?
$645.
645, okay. I have to add back the $85.81. Okay, to give me a total of $1844.84. So therefore, now what is my new average cost per item?
So $2.860217 is almost the same, no?
It's about the same, yes.
Mm-hmm.
Okay. All right. So here we figured out what the cost of goods sold is. It's for $85.81. So I gotta plug that number in. 85.81. And here I need to also make a note that customer B returns 30 mugs for full refund. Okay. Well, I guess yes. Good. Okay. Let's see. I think we have time for one more and then we'll go on a break. So let's see what happened next. Or in the same day, okay? Same day, May 15, you end up selling an additional 25 mugs for $10 each for cash. Okay. So if I sold 25 mugs at $10 each, what's my total sales?
250.
250. All right. How much tax am I going to be charging?
$20.63.
$20.63. So therefore, I should be receiving a total of $270.63. Okay. But we end up selling, right, 25 mugs. So in this case, let me change this real quick. 25 mugs. Okay, so we need to calculate our cost of goods sold. Okay, inventory worksheet. This time it is May 15, and we sold 25 cups. So in this case, cost per item is that $2.8602. Okay. So what is going to be my total cost of goods sold here?
$71.51.
$71.51. So now we're going to update our inventory one last time. So 615 minus 25 gives you 620. Okay. 1844 84 minus 21. I'm sorry, 7151 gives you
1773.33.
17. Good. Giving you a total cost, average cost per item to be more or less around the same number. Okay. All right. All right, so what I'm going to have you guys do is we're going to stop here for our break. It is exactly 3 o'clock, so please be back no later than 3:20, and we'll continue on with our lesson, okay?